Are you struggling with forex trading? You might be making one of these common beginner mistakes. In this video, I'll break down the top 5 trading mistakes and how you can avoid them to improve your trading game immediately. The first mistake is over leveraging, and many beginners they use too much leverage and they think that it is the fastest way to grow their account. But leverage, on the other hand, is a double-edged sword. And why it's a problem? Because over leveraging amplifies losses just as much as it amplifies gains, often leading to blown accounts. So if you over leverage, let's say that your account is $100 and you use a one lot size, then in 10 pips your account is gone, right? So you use a lot size that is way too high for you. And how can you avoid this over leveraging? There are two ways. Use leverage conservatively, for example 1 to 10 instead of 1 to 100, and calculate your position size carefully before entering a trade. And there are many tools online that you can use to calculate your position. Number 2, ignoring risk management. So risk management is often overlooked, but it's also crucial for long-term success. Now, why it's a problem? So without a proper risk plan, one bad trade can wipe out weeks or months of profits. For example, you have a few winning trades that made you about 10% of your account. But then you enter another trade and you use a 50% risk on the trade and you lose the trade, then a big part of your account is gone, right? So how can you avoid this? Never risk more than 1 to 2% of your account per trade if you want to do this for the long term. And always use stop loss orders to limit potential losses. Let's say that you take a buy and suddenly the price moves into the other direction, then it's just a simple loss and you continue with your day, right? But if you do not use a stop loss order and you use a 2% risk of your account and it keeps going to the downside, and before you know it, you're, let's say, 50%, 60% in drawdown, which is not something that you want. Mistake number 3, trading without a plan. So jumping into trades without a strategy is like sailing without a map. You're bound to get lost. And why it's a problem? Because emotional trading often takes over, leading to inconsistent results and unnecessary losses. And there are again two ways how you can avoid this. First, develop a trading plan that outlines entry, exit, and risk criteria. And another one, which is also really important, stick to your plan no matter what. So if you have a plan, just keep doing it every single time. It doesn't matter if you lose, because that is also part of the plan. But as long as you have backtested your trading strategy, you have a plan that is well structured, then overall in the long term you should be winning. Over trading, well, many beginners they think the more they trade the more they will earn, but over trading often leads to burnout and losses. Why it's a problem? Because you're exposed to more market noise and making impulsive decisions. So you see it often with scalpers or day traders. They place a few trades and they're 1 to 3% in profit for the day, and then they keep trading because they want more. So they become greedy, right? And the longer you are in a trade, the more you are exposed to market noise. And how can you avoid this? Focus on quality over quantity. Just only take high probability setups, and also just set daily or weekly trading limits to avoid over trading. So if you made 2%, 3%, 5% for the day and that is your target, just stop trading. And the same applies to weekly trading. If you made 5-6% in a week, or 3 or 2, whatever your plan is, stop trading, do other things, just enjoy your life. Mistake number 5, not keeping a trading journal. So without tracking your trades, it's impossible to know what's working and what isn't. So I recommend, if you're a beginner, just start having a trading journal and document every single trade you took, and also describe why you take a specific trade, right? And then you can see if that specific trade matches your entry criteria, your exit criteria, everything that you find important. And why is it a problem to not keep a trading journal? You simply can't identify patterns or improve if you're not analyzing your performance. And how can you avoid this? Record every trade, really simple: entry, exit, strategy, and outcome. And review your journal weekly to identify areas for improvement. So recap in one sentence: avoiding these 5 mistakes: over leveraging, ignoring risk management, trading without a plan, over trading, and not keeping a journal can save you a lot of frustration and money as a forex trader. But not specifically forex, it also applies to crypto or stocks trading. So let me know, which mistakes have you struggled with the most? Let me know down below. Share your experience in the comments. Thank you for watching. If you like this video, give it a thumbs up, subscribe, and I'll see you in the next video.